something. I mean, I covered it in my corner already, but maybe a few words regarding that should help. And regarding other data prints, nothing extraordinary. I mean, there are a few data prints like US trade deficit, US productivity, but it's not super important. Of course, it is important in the sense that it tells us more about the state of the US economy and how that could be reflected in the monetary policy decision of the Federal Reserve. But it's not like super important in terms of price action or immediate price action, so no need to complicate it even further. Just going through the list of events. What else? Initial jobless claims, that's published every week, so also not super important. And a few speeches by Federal Reserve officials as well, but unless Powell is talking, it doesn't really matter. A bit more eventful next week, though. We've got CPI next week and PPI, so two very important inflation prints that should be important to the dollar, and the dollar will be important to our crypto market as well. All right. Apart from that, there's a lot of discussions going on around the Federal Reserve that is not completely irrelevant, right? We've had the FOMC meeting on Wednesday. Decision was known way in advance, which was no rate cuts. But what was important was that there were two Fed officials that actually voted in favor of a rate cut for July, and that showed that it is starting to crack in the Federal Reserve, and that there's some misunderstanding regarding the future monetary policy approach. And then we had one official that actually resigned. And now Trump has basically to appoint somebody else for that position, and the market responded to that in rotating out of the dollar conveniently at a very interesting macro zone at the 100 level for DXY. And the interpretation to that is basically that the market fears that Trump is taking more and more control over the Federal Reserve, right? And Trump's objectives have been quite clear. He wants rate cuts. He's trying everything in his power to do that. He couldn't fire Powell. He couldn't politically and publicly pressure him to pivot. So and now what he's basically trying to do is taking more and more control of the Federal Reserve. And you can see the price action of the dollar, and which basically is a fear that Trump is taking full control or partial control over the Fed, that he is appointing more and more officials that obey his objectives and orders, and more important than anything, that he will soon appoint somebody as the head of the chair of the Federal Reserve that is more in favor of rate cuts, right? So that is keeping money out of the dollar. So long story short, Trump doing a lot to cut interest rates, doing a lot to keep the dollar weak as well. He's intentionally doing that. We've discussed it many times. He doesn't want a strong dollar. He wants a lower trade deficit, among other reasons. And he has the power to keep it weak, and that's my only concern regarding the dollar. But also from a TA perspective, perfect rejection from the 100 area. It's like he perfectly timed that FUD around the Federal Reserve at this level.
Hello.
Hey, Rego.
Oh.
How you doing?
Good. How's everybody? How are you?
I'm good. How are you doing? Did you get enough sleep?
Oh, I didn't sleep yet. I'm running on fumes.
And why is that?
My time.
Why are you
just
doing the Europe session to yourself?
just because I just want to be more in tune with the markets, and this past 2 weeks I feel off my game there, so I always felt like I was either going to bed before a move or waking up to a move that already happened, but you know how it goes. The one time I stay awake, nothing actually happens, so yeah, so now I'm tired for New York, and yeah.
All right, makes sense. Okay, let's get going. I gave a little prep talk regarding the macro as we were waiting for you.
Sure.
So maybe you can go ahead and share what you have, and
I
if
mean,
there's anything.
what did you end up covering? So just so I know, so I don't repeat
I
or.
basically I had a few thoughts on the FOMC meeting, right? Because we didn't discuss it as it was after our stream last week. Then I discussed the employment numbers, which led to a decline in the price of the dollar, right? Because it suggested that the labor market is more harmed than expected. More harmed than expected basically means a weaker economy than expected and bigger probability of rate cuts in September. And you can see that in the rate target projections for September, it's almost at 90% that the 90% probability that we'll get a rate cut. I covered that, and then I covered some further around the Federal Reserve and how Trump is he's trying to take more and more control of the Fed, which is also contributing to a weaker dollar. There was one official that resigned from the Fed, right? And now there are discussions that Trump is going to replace that official with one of his own, and that he'll also announce the candidacy for a new chair of the Federal Reserve, who most likely will also be somebody who's more in line with Trump's objectives. So this is what I more or less covered. There are not a lot of events this week in terms of the macro. There are some next week, like CPI and PPI, that should be relevant in terms of U.S. monetary policy and the dollar. And yeah, obviously the dollar remains critical to speculative assets as well. So this is it in a nutshell.
Yeah. All right. So, I mean, the FOMC. I watched a bit of the press conference. I didn't watch all of it. Pretty much everything we needed to hear. Right. Strong economy. Overall, nothing too much out of the book. Right. So again, I like to think a market likes this when you know. Any out of the box questions are usually answered. We usually get some pretty poor responses. And if I'm not mistaken, we did have a bit of a sell off during the press conference itself, and then slowly but surely recovered once Powell was done speaking, or just shortly after market close. I don't think it came as a surprise, right, to anybody that was expecting any sort of rate decision to be made last week. I'm pretty sure that was set in stone. But this month, like you said, just taking a look at the predictions here, I'm guessing this mostly has to do with employment numbers being missed by pretty large margin, right? Not not just missing by a hair, but missed pretty bad. So yeah, it looks like we finally get our rate cuts next month. I mean, this is obviously going to fluctuate over the weeks. I mean, with CPI next week, right? If we were to miss numbers on that, this is probably going to balance more out to maybe like a 70-30, but it does look like we're finally going to get our first rate cut going into next month's FOMC. So that's a good thing. And I mean, the dollar has responded accordingly for this as well. But I mean, like, as if there's much more to add on this, I don't really think so. The candidacy for a new federal chair, that kind of makes sense to me, right? I don't think we had any intentions or any reason to believe that Trump has been satisfied with the current direction or the current decisions of Jerome, right? So it only makes sense that he's going to start pushing forward, right? Because I don't think he could do anything legally to get him out before he steps down. So I guess it's just the process now to plan ahead before he inevitably steps down. I think is next on their agenda, right? So I don't see anything as out of the ordinary. At the end of the day, FOMC claims to have a strong economy. And like a lot of people see that as bad news. That's pretty much good news. I think the economy, the U.S. economy, has done very, very well. But I do believe that rate should be coming down, right? And I think I finally get my answer, right? Or at least I finally get my wish. Because the way the rate that they're at right now is just way too high, in my opinion. But I don't see anything that you probably haven't already discussed that I could chime in and add into, right? I'm pretty sure everybody knows where I stand on this. But yeah, that's really That's really all I have to say. I mean, there's not much more I can add to it. I mean, I'm taking a look at the dollar here, just a rejection off the range low that we originally broke out of back in April. So that's kind of following the
Yeah,
lines of TA. Nothing too crazy here. Just day in, day out. I want to say this is more summer vibes, summer price action vibes. Got a nice move to kick it off, but as you can see, the rest of the market just continues to shuffle and consolidate and chop and suffer a bit of drawdown. Nothing too concerning on my end just yet. Just summer PA vibes right now. So making a lot of sense. I think something I want to add is the institutional bid, right? And this for our markets. Pretty much, as far as I'm concerned, Michael Saylor is most likely out of raised funds, right? Using MSTR, right? And to my understanding, there's a new proposal, and I forgot what the ticker is, or I forgot what the offering is, but it's another way to raise funds, right? So for the meantime, or at least in the meantime, those weekend institutional buys that we have been seeing, all year long. I assume they come to an end right after this recent 2.5 billion until a new strategy is made to acquire more Bitcoin, right, and to raise more funds. So if we're seeing a slowdown right now, I assume a lot of it has to do with that, right? From a structure wise standpoint. Bitcoin has relied heavily on this continuous buying and this continuous pressure, right? So now that is most likely coming to an end in the immediate future, until new funds are proposed and until they could be raised via a different strategy. I assume the bid to slow down because it's going to be lacking that, and it's going to be in the long term missing that, right? So I think we're gonna have a bit of a setback. It's a bit normal. But that's probably the only thing I'll add from a macro perspective. Is I know Sailor's in the process of proposing something new, and I also have reason to believe that his strategy purchases will also die down a bit. So the market's gonna be lacking a reliable and consistent bid like that, and that should be on everybody's radar. That's what everybody should be focusing on and at least paying attention to, right? Because that's a big institutional bid, and if that's gone, we will have some pockets and some gaps right in between. So that's maybe one thing I'll add.
Yeah, that's a good point. And I think what I can add in addition to that is that the stock markets have been basically up only since the April dip, right? You can also see that from the volatility index of the S&P 500, which has been very calm. Historically, it's been quite calm between April and July, right? But historically speaking, it has also increased in August and September, because if we just consider seasonality, September has always been a good month for a little pullback for the S&P 500. And with little pullback, I mean anything between 5 and 10%, which is nothing extraordinary, right? But it could line up with a lower number of ETF inflows into Bitcoin, and that I think makes a lot of sense, and it complements what you said about Sailor, right? So if you were to get a pullback, say to the previous all-time high area for the S&P 500, I don't think it's something to be necessarily concerned of. I think that would be a very normal retest of the previous all-time high zone. And yeah, we will see how Bitcoin would react to that, right? In my view, 112 to 108 is still a very, very important zone to hold for BTC. As long as we hold above that, I think we should be fine. We should only be concerned if we lose the previous all-time high area. I think that would be, I wouldn't say higher time frame bearish. It always depends how much or how long we accept below these highs, right? But it's not something you necessarily want to see. But that being said, about what Rego said about Sailor and the potential dip of the S&P 500 and Nasdaq and other stock markets in September is still possible, right? So we could expect some lower ETF numbers in the next few weeks, and that's still completely normal. What will be important though is to see if any higher time frame structure is damaged, right? That will be important. But any more lower time frame drop, both on the S&P 500 or Bitcoin and ETH, would be quite normal, because we also had a pretty big run, especially on the secondary market with Ethereum, right? Still only a few percentages below the 4K area. coming all the way from 1,000, what was it, 500 in April. So that's an extraordinary move. So makes a lot of sense for people to take some profits when they come back from their holiday at the end of the summer, right? But notice that it's not something to necessarily panic about, and it's always important to understand how the higher time frame structure develops after that.
Yeah, and I just decided to pull up exactly what I was just referring to before, the STRC. That's what it's going to be highlighted at. And these are the proposed offerings, right? So again, this is Sailor's next way of raising more funds to buy more and more and more and more. Um, I can't say I can't understand if this is a bad thing, but again, it's about raising funds to buy more, and the profit strategy is Bitcoin's exponential growth, right? So that's what's being proposed. Will people bite? Most likely, right? But it's just to say, until this can get figured out, I think that institutional bid slows down quite a bit. Another thing I'm probably a bit more concerned about is I can't justify, at least for the rest of the market as a whole, right? And of course, stocks play a big correlation with this. I mean, typically, whenever we see a bit of a slowdown or a bit of weakness in our main legacy indexes, our speculative assets, do tend to take a turn. They're the first things to usually go risk off when, even the safest, most liquid indexes show signs of downturning. So again, there's always a correlation with that. But more importantly, like what I'm looking at is when I consider the ETF flows, right, into Ethereum and into Bitcoin. Very, very recently, we've seen a transition out in terms of flows for Bitcoin back into Ethereum for a couple of days. That's been going on now. Now I fail to see the structural bid, right, that we've been used to seeing all year long on Bitcoin specific. I fail to see where this is going to come from for the Ethereum side of things. Now, at any moment, this could change, right? It's just as things currently stand. It's just there's a lot of data to go through here, and it's going to take quite a number of buyers to push through, right? All these known sellers, and for that reason, I have just a bit of concern. It's not coming from a place of bias or anything. It's just where's the structural bid, and I do understand we have treasury companies and staking being introduced, and we have treasury companies in introducing strategies. It's just going to require a big hefty number. And as I'm concerned, like as far as I'm concerned, at this moment in time, I just don't see it yet, or I don't see the proper proposals. So just want to throw that out there. These past recent days, maybe a week or so, the outflows of BTC and into ETH have been, I don't want to say the word obvious, but they've been there. Yet it's not helping much is what I'm trying to say. So I'm just keeping my eyes on that. And again, it's more from a macro perspective, not from a day-to-day basis where, one pairing performs 5 and the other one doesn't. It's more on like the grand scheme of things. So keeping my eye out on that. And it's a good point that someone else brought up Bitfinex T-whopping again. Usually whenever we see Bitfinex longing, typically it's not, the most bullish sign. It means that they expect downside or drawdown. So just to throw that out there for anybody that may watch that. When Bitfinex longing is usually because price is down. Yeah.
Yes, I heard about that, and good that you bring that up. So maybe you can elaborate a bit more on it. Actually, would be, I think, quite an interesting observation, because
Sure.
there's historical evidence that when Bitfinex longed Bitcoin, right, that it was very close to a local top for BTC.
Yep. Almost every single time. They tend to unwind when price is going up, as you would assume, right? And usually whenever this is building, it goes in waves, right? So we make our impulsive move, and then we drop as price is going up, or vice versa. So typically when Bitfinex starts longing again, it's usually because there's an assumption of drawdown, right? They long on the way down, they sell on the way up, or they deleverage on the way up, I should say. And it's in bits. This can go on for a very long time. It doesn't necessarily have to match the highs that it was at previously, because if it isn't a continued cycle, it'll probably be about half of this, and then they'll unwind again, and it'll just continue, unwinding until it's at levels where you're more familiar with, right? But as far as things stand, like, this could just again suffer some immediate drawdown or downside. But on the bigger story of it all, it's it's still in a trend that suggests unwinding of longs over a longer period of time. So there's that. But yeah, it's usually inverse correlated. So when Bifinex is T-WAPing, it's usually a sign that we're going to start seeing breakdowns, I guess is the word to say.
Good one. Good one. All right. What else do we got? Not many macro developments, unfortunately, this week. So we just have a potential announcement by Trump today, and
At 4:30,
my
right?
speculation, my speculation was that he will announce his candidate for the Federal Reserve.
Oh, maybe.
And that could be interesting because there are a few names that have been rumored. Obviously, all of them being more in line with his view on monetary policy, which you can assume, right? If he asks for rate cuts, he's not going to appoint somebody who he thinks will follow Powell's approach. But I think that could be relevant in a few hours, at least for the short-term price action. Could see the dollar also reacting. Although I might also speculate that the dollar is already pricing in, because it's dropping, and it could be pricing in Trump announcing somebody for the chair of the Federal Reserve that might be more in line with his view on monetary policy. But that's just me speculating. That could be something that could be relevant in a few hours. What time was it again, Rego?
I'm not sure. I think it was 4:30. I saw. I could be just becoming delusional. Eastern. Should be 4:30 Eastern. Am I crazy, guys? Can anybody confirm that? I'm pretty sure. Why isn't my thing not working? Anyways.
Right, it's September is clear, Nodi. We have a 90% probability, so we're getting a rate cut, absolutely.
For now, unless again we get like completely blindsided by CPI numbers, and I'm talking like really bad, like really bad.
It has to be very bad, but it's very difficult to assume that the 90% probability can be reversed, to be honest. And even before the employment data, we had odds in favor of a rate cut in September, right? It wasn't as big as it is now. It was at like 60%, more or less. Now it's obviously more obvious.
Yeah.
But it's difficult to assume that we won't get the rate cut in September. Will it matter? I don't know. It's not quantitative easing, right? Just to clarify that it's not quantitative easing. They're still tightening. They're still decreasing their balance sheet. That's what they said even during the FOMC meeting, right? But it's loosening their tightening process. Can we call it that way, or decreasing the pace of their tightening process? So it's not.
Yeah, they're just bringing rates down to. They're just on the verge of bringing rates down to a normal borrowing rate, right? Because again, just feel like it's just a bit prolonged. If they were gonna do this all along, I just felt like it's a bit prolonged for no fucking reason. But yeah, it's not. This is not like COVID rate drops, guys. This is like just bringing it back down to reality, giving people a fair chance. Well, when I say people, just giving a chance for the dollar to be borrowed at a reasonable offer, right? Because anything towards 4.5, I think, is outrageous for where we're at with everything considered. So I think it's a good point to bring up. Is it going to be 0.25 or 0.5? Because if they're going to look to cut 2 months in a row, wouldn't it just make more sense to just cut by 0.5 at this point? So I guess that's more.
It will depend a lot on the inflation data next week. We have CPI
so that makes sense.
Which is the last inflation print apart from PCE, but the last PPI and CPI print before the rate cut decision, I think. Or maybe we also have one in September. If there's also another one in September, then it will also matter, of course. But I do think it will depend a lot on inflation data. Like if CPI and PPI is is, let's say, coming below expectations, if they see that there's progress in inflation, they might go for a 50 bps rate cut, right? And this then would change, and what it would look like would be something like maybe 80% probability for a 25 bps rate cut, 20% probability for a 50 bps rate cut, right? But I'm pretty sure that not even the Federal Reserve knows by now on how much they're going to cut
And
interest rates.
and that's evident here,
So
right? I mean, there's a 0% understanding that this could happen, right? So that's just something to. This is not even being accounted for. So again, yeah, it's probably going to depend on next week's data. So DB,
yeah,
I think this is good to talk about just for the viewers. Like next week, you're going into the CPI numbers. What would you be looking for to assume that maybe zero point 0.5 could be on the table? What would you
let
tell
me
your viewers then?
let me just look at the expectations for next week. So we don't have a forecast yet. CPI in July was 2.7%. In June, it was 2.4%. In May, it was 2.3%. So it has been increasing for 3 consecutive months in a row. And so the first thing that will matter is what the forecast will be. Will the forecast be another increase in CPI compared to last month, right? If not, if let's say we expect 2.7%, that would already be a good indicator that we could go towards a 50 bps rate cut. And especially in that case, if then CPI, let's say, does not come as expected, but even below that, then the probability of a 50 bps rate cut increases, right? Because it would suggest another start of a trend shift in inflation. But if, let's say, expectations come in at 2.8 or 2.9%, which
Higher
is
than
above the
expected.
2. Higher than last month, then and if the data comes in line with expectations, right, it will still mean that inflation is increasing in relative terms compared to last month. Then in that case, I don't think that the Federal Reserve would be able to justify a 50 bps rate cut. So it will depend a lot on how inflation develops in the next few days and weeks. So I think
I
that's
got
what I
some
would be looking.
forecasts. I got some forecasts here. For year over year, 2.7 is what they're expecting. Month over month is 0.2, which is what is predicted. So it's pretty much year over year unchanged. Month over month, they're expecting zero point 0.1 lower. For the core year over year, they're actually expecting 0.1 higher. And for month over month, they're expecting no change. So that's what we're probably going to be looking at. We don't have a consensus yet, but the forecast, quote unquote, is what these are the expectations. So pretty much 0.1% differences. Nothing too crazy. Nothing too crazy. So if anything does come way lower than 2.7, then yeah, we're most likely in the talks for 50. But at this point, I don't think a single person's considering it. It's very forward thinking, right? But it's optimistic, and I like that.
It's not impossible, right? Because we have seen
No, definitely
target
not.
rate probabilities changing on a single data print, right? So it
Yeah,
will depend a lot on inflation.
and we do have already people speculating for October, and that's already a 60-40. Let's just round it off. A 60-40 that there will be another rate cut in October, right? So again, if we're expecting two rate cuts of a rate cut of 25 for 2 months in a row, why not just lower it by 50 in 1 month? So it is there. So that is there to speculate on. But as we're concerned right now, it looks like it's going to be 25. But we'll know more by next week for sure. So we'll take a look at
One
it.
thing one thing that's also important to note is that a 25 bps rate cut won't be as negative for the dollar because it is more or less expected for a few weeks, right? Like it was
Mm.
never as it is today. But there have been speculations about a potential rate cut in September. Market has priced that in to a certain extent, which has been seen by the weakness in the dollar. But a 50 bps rate cut would be a completely new scenario, right? It would be something that the market did not expect yet and did not price in yet. So I think that would have an even more negative implication on the dollar, right? So if we, let's say, get good data now and the market starts pricing in a 50 bps rate cut, I think we could see a bit more downside on the dollar. And I think that would be quite positive for speculative assets because investors always look to hedge against the devaluation of the dollar, right? And if there are expectations that the dollar can drop a bit more, then we can have a few days or maybe a few weeks of more positive price action on more highly speculative assets like crypto, right? So it's not completely irrelevant. Of course, there's always a delay of the impact of the dollar on speculative assets, but we have seen in many cases as well that it can be immediate, right? The effect of the dollar on Bitcoin and on altcoins can also be quite immediate. If we look at the dollar a few days ago when it was gaining a bit of more momentum, right? We saw speculative assets struggling instantly, right? So and then when it started dropping, speculative assets started reversing a bit. Of course, not a macro reversal, but on lower time frames from a Saturday dip, they did reverse a bit
There's
because the
correlation.
DXY. There's
Yeah,
certainly correlation, and the dollar is moved by these things, man. It's moved by monetary policy. It's moved by sentiment, right? It's
yeah.
not just technical analysis that moves the dollar, and that's why these things that we discuss they matter for the dollar and they matter for speculative assets as well.
Just concerned. I'm just concerned about how much we've already dropped off. Like,
It's wild.
is this the
It's
move?
wild.
Like, because again, like, is this the? And we've been asking this question for a long time now. Is this move already accounting for um
The rate
the
cuts, yeah.
expected cuts? Like, not just the expected cuts, but also for the growth and new highs that we made on indexes and on BDC. Like, are we just ahead of the punch on this one? But at the same time, I don't think that's true because there's been a lot of people questioning why it hasn't happened already. So I'm a bit in between on that because usually we're really efficient at beating this, right? We're really efficient at beating the dollar before its actual announcement. Um,
Yeah.
so it's the only thing I'm a bit worried and concerned about here.
One thing that I can guarantee you is that the dollar will not drop on the day that the rate cut is announced. That's not going to happen. So we either priced in a rate cut now, or at least in the recent weeks, or if there's a possibility of a 50 bps rate cut, then we will do some pricing in beforehand, right before the September meeting.
Yeah,
But
that makes
I
sense.
expect it to be. I expect it to be fully priced in by September. Wouldn't even be surprised if on the day, let's say Powell announces a 50 bps rate cut, right? Nobody brought that into play. Let's say it happens. I guarantee you the dollar will start pumping from that day. That's a bet I'm making on stream here
Okay.
because it will be
Okay.
priced in beforehand. You
Yeah,
saw it in
I agree.
September, right? Look at the price action of the dollar in September. You know that we were debating whether they're gonna we knew that there's gonna be a rate cut in September last year, right? And we were
Yeah.
debating whether it's gonna be a 25 or a 50 BPS rate cut. And on the day it happened, look what the dollar did in the next weeks, while the Federal Reserve started an easing cycle, because at that point we did think that they're not going to stop, right? Until December, we thought that the dollar is going to keep growing because the Federal Reserve, or dropping because the Federal Reserve is going to ease. But most of it was priced in the weeks before the September meeting, right? So I think that we will see something very similar to that this year as well.
Yeah. I mean, I don't necessarily put it past. Hmm.
How come you stream with Rego and not Poggy? I'd love to have a stream with you, man. I just didn't know you were interested. We can have a stream whenever you want.
Both optional. The more I look at it, I mean, fuck. I don't like to be a fractal, bro. Very, very
Would actually be a
similar.
pretty good idea because I also use divergences a lot in RSI in my system, Pocky, and people are asking me a lot, but I use them more in higher time frames, not like you in more lower time frames. So it could be a good combination for a stream. We should think about it. and people then can ask questions about our strategies. Like I use daily divergences, for example, right? And you also use divergences on the 5-minute, 15-minute, whatever.
I mean, all of us use pretty
You do.
much some sort of volume oscillator, right? There's some sort of volume indicator.
We'll talk about it. Yeah, for sure. Good idea.
John's a different animal. John's
Oh
vibe
yeah, like
trader.
John cares about. John sees the price dropping, he just longs, man, right after waking up in the morning, and he usually prints off these trades, not overthinking it.
Yeah, John's a wizard. Like he's got his own method to his madness.
Yeah, yeah, yeah.
But
Absolutely.
we all to some extent. I don't think there's any trader that we have in here that doesn't use either a form of RSI or any sort of volume oscillator. I think we all use it.
Yeah.
From Tex down to McKelly down to myself, DB, JD, everybody. It's just we use them for different things. So
All right, so we got New York Open, by the way, Rego, which we didn't
yeah, I was
cover.
taking a look at it, but it's kind of whatever for now. It's the first 15 minutes. So I don't really pay too much attention to it. Nuked off the
Yeah.
pre-open price. Haven't really made it either a new low or we're in pretty much in an inside day so far. So it's really not much to consider just yet. Can we get 111K Pocky? That's what I'm eyeing, man. I've been eyeing this for a while now, man. Just does not want to
111 is nice. I
does
also
not
like
want to snap in.
108.
108.
Mm.
I mean, I'd go for it. This is the
Wake up,
first
maybe.
4-hour demand block in a long time. Like, it's tough. I mean, we can just as easily just continue, but we don't have we don't have that structural bid like we're gonna have every weekend for the past fucking 20 weeks. So there might be a little bit of a mispricing here until that can get figured out again. But at any moment, someone could announce, you know, their strategy to buy, and then we're just back to the same shit. But yeah, I want to say 112 to 110 for a very short to medium term swing. That's got to be the area for it.
Yeah, I don't want acceptance below that, to be honest.
No, me neither. Me neither. Like we would need to we would need to get back above the average. That's what would make the most sense. We definitely don't want to even. We definitely don't want to.
What do you think? What do you think about the monthly divergences, Pocky, on total market cap and total two? Have you noticed those? Scalping. I ignore those. Why is that? Too wide to play. No, I mean like in more directional bias for the next few months, not like in terms of intraday or interweek trading. Yeah, I mean from a macro perspective, of course. I don't use them on my 30-minute bullish divergence on Ethereum. You know what I mean? Nokia wants 92K for BTC.
Okay. I mean, it's a level for me too. I have 91.8, but I don't know. I don't know. I think you need to look more towards 106, 330 if you're expecting a full retracement of this gain that we've made, right? What if we never touch the level, completely front run it? That's another fear of mine. Again, these demand pockets have become really competitive, really competitive. It's the first one we see in a very long time. It just nudged, my area of interest, and already it immediately moved away. So, if it wants to do like a little higher low here, I'm fucked. Like if it just wants to start trading back above, like I'm fucked. So, like I won't be able to get filled. It's just so competitive. It's so competitive. But I know we're on
I
the
think
right side.
we need to reclaim 117, 118, especially 118 in my view. Like get back into that range it was trading in for a few weeks, couple of weeks.
Like I could already see us. I mean, we've already been ranging for quite a while. But like, what was I gonna say? Hold on, I was just about to say something. I forgot. Oh my god. Okay. You said something about 118K, right? You want to get back above
117.
118K?
Yeah. Like
Okay.
117 is a good start, reclaiming these range lows, right? But 118-ish would be pretty good if you're speculating on higher. If you're speculating on lower, of course, you want that box lost, especially below 108K. I would be quite worried.
Yeah, I mean, I'm okay with starting my bids into 112, 110. And if we do get lower, next area would be 1.6. But it's time to start, averaging in. I'm going to start averaging down. It is what it is. And I have Bifinex Confluence. So if we're just gonna have to long the drawdown. I think that's just what I'm gonna have to do. So I'm gonna pick my areas. We'd have to do something like this. So we'd have to buy the demand pocket, assuming that's enough and that's efficient enough to push back above and continue a trend. Or we go into correction territory towards 106, defend the range high that we previously made. Or yeah, I'll call that the range high. Actually, no, I can't call it the range high anymore. Actually, yes, I can. Okay. Call that the range high again. And again, if that were to fail, yeah, you'd have to target 92. And then that leaves us into just above a 30% correction. I don't see us correcting 30% again, but yeah, we should definitely get like a more shallow dip this time. 106 being the lowest for me. So I'd average into here. If my
And also don't
assumption is
forget
new
that
highs.
the last time we got a 30% drop was also due to tariff FUD, right? So the Bitcoin basically followed stock markets and the global markets overall.
Yep.
So I think BTC has matured quite a lot this cycle, especially with the institutional flows. We have talked about it before. So a 30% drop would be highly dependent on what global markets do as well. I do expect some form of pullback in August, September, as I said, but I don't expect S&P 500 to drop by 20% or 25%, just like in April. That's not going to happen now, maybe in a few years, but not now. So that being said, I could see Bitcoin retracing a bit if it's not done already, but like not a 30% drop. Not now, not now. At some point, maybe yes, but not now. But of course, I mean, be prepared for anything, right? As I said, there's a big zone at 112 to 108 for me. Find higher time frame acceptance below that, and you have to be open for any possibility, right? And I've said it before, we have some higher time frame divergences on the monthly. It's always something to have at the back of your head, right? And not ignore them. At least I don't ignore them for my system. But I think it's just best to understand the levels and play them, and to understand what happens if a level is reclaimed or lost.
And just for the record, I don't think you're getting 30%. I mean, we absorbed fucking over or close to 100K BTC, and that says a lot for the prices that we're currently trading at to absorb 100K BTC or more in a short while in newly discovered prices, as expensive as it currently is nothing short of a phenomenon, right? This would have once upon a time obliterated the market, obliterated it, and now we're lucky if we get 5 to 10% drawbacks. So that's just something to throw out there when DB is referring to how much this market has matured. It's no joke. It's the type of market where back then those numbers would scare people, and these days you almost have an instant buyer for it, right? So
Absolutely, that's a very good
yeah,
point. And I mean, I'm a believer of financial cycles, right? I'm a trader. I believe in local tops and local bottoms. Can we agree on that term, Rego? Because I know you don't like the
DB,
term top, but
DB, you must got me
we can add
mistaken
the
for some
local.
sort of moon boy. You know how
I think of market cycles just as much as you do. It's just I follow the traditional crypto market cycle where I believe um, our cycle has its own unique way of doing things, right? So I'm a believer of that. There's no doubt about it. The problem is I don't believe in perfectly timing it, and for that reason I find it just on the borderline sense of being a bit, especially when an asset is the asset we're talking about, which is right in front of us, right? When it comes to alts, I'm a lot more lenient on waiting for a perfect timing for it. Whereas BDC, I've felt time and time again, when it rains, it pours, and it never feels right to buy. And when it's high, we're on heroin, and it's very very hard to see when the end is near, right? So for that reason alone, I just choose not to time this specific asset. I will always long pullbacks. I will always allocate larger amounts on serious drawdowns, but I am a believer of financial cycles. I just don't believe in the perfection side of it, of timing every single move that it has, right? But when it comes to alts and all that, I do believe they flow and they breathe and exhale, right? They suffer uptrends and then drawdowns all in the same respective right. So I do agree with you. I'm on that side. I hope that's not mistaken. But
No,
when
okay.
it, when it comes to BDC, it's
Yeah.
just a bit more tricky.
So that being said, I do expect larger drops than 30%, but not now. I do expect it sometime, maybe next year, maybe beginning of 2027. Yeah, that's the good share from Nodi. I believe in that concept, but what he's discussing as well, right? Of course, global liquidity plays a big role in global markets. They drive asset prices, right? And yeah, I mean, it seems now that everything is going up. We're never getting a bear market again. Just like, in bear markets, we say we're never getting a bull market again. Bitcoin is going to drop and drop and drop.
Oh, I'm a believer
But
in 80% drawdowns. I am.
no, I don't.
It's
No. That's what I wanted to say. I also don't think that we will drop 75, 80% like we've done in previous cycles.
well, you're my
But
theory.
at, at, at the end of the day, it will depend on what global markets will do, right? If we have global markets going into a bear market or in a corrective period, Bitcoin will follow as
So
well. Because believe it or not, ETF buyers are also retail traders. Yes, they're more institutional, but their
they're more
behavior
accredited.
has been.
They're more on the accredited side.
But
At
their
least from the
behavior
data.
is very similar. It's very similar to retail, right? ETF inflows have been increasing when the price of Bitcoin has been increasing. ETF inflows have been decreasing when the price has been dropping, right? Which is a very typical behavior for retail, right? So when global markets stop going up forever, and we get into a corrective period at some point. I'm not saying it's happening this month or next
It's
month. No, no, no. It will
I'll,
happen at some point. But one thing that I guarantee you as well, and where I'm at the same page with you, Rego, is that I don't think we will get a 75, 80% drop. More like
so
something like 40, 50%, because we now have this institutional channel as well, right?
that's true.
And we
That's true.
know that institutions will buy
So
the dip of Bitcoin. So,
I want to explain why I think there's always going to actually be, and I won't say 75 to 85 because I think that's just a bit too rigid. I'll say something along the lines between 60 to 80%. And the reason why I say this is because every single cycle that I've been a part of, um, st- from a numbers perspective, the drawdown should always be 50 to 60%. I think it's fair territory. The problem with that is, after a market reaches a certain level, right? It reaches a certain level of parabolic price action, that the funding it receives is so insane, and the amount that people borrow, and we're not even talking retail here, we're talking institutions. They borrow at such a ridiculous, ludicrous amount that they end up blowing up in the process, and that blowing up in the process leads to underlying factors that are not yet known to the public. So much like the FTX blow up and all that blew up, realistically, Bitcoin should have bottomed at 30K in 2021, 2022. But because of the fallout, because of the contagion, because of how much exposure was not only irresponsible, but actually criminally negligent with the funds they were receiving, caused it to blow up to that magnitude. So it's always worse than it actually is. It's not that it should be down 75 to 85%. It's that the fallout that usually happens after we reach such a ridiculous number, after we reach such a ridiculous amount of attention, that is what usually happens. Is that it gets so bad that people panic, and it's not even that people panic; it's that those promised to protect your funds actually gambled with your funds, and for that reason, all of this is lost and it gets offloaded at an insane pace. So I always factor that in because it is like if there's anything I know about crypto is it's still very much in its wild west days. And for that reason, you have heists, you have robberies, you have exploits, you have everything you can name. And for that reason, I never rule out the fact that it can almost look like it's completely over. And for people, I've discussed with a lot of people, and they can stomach 50%, they can stomach 60%. But the second they start to see the 75 to 85% zone is when I actually see true panic, like real panic, and that's usually the end of it, right? It's so I always consider it. And another thing I also consider is the institutional bid that you see today. When it's all honky dory and everything's going up, there's always funds to raise. But if you look at sailors purchasing in the past, right, when Bitcoin was in a tremendous bear market, people ask why didn't he buy more? Because raising funds was nearly impossible at the time because everybody was convinced, you know, with the FTX, with the Celsius, with the Luna, this and that, it's all a scam and nobody wants to actually invest money into this and nobody actually wants to raise funds for this. So again, like when shit hits the fan, like it so typically does in our industry, it's so much harder to find that bid that we're looking for, right? So I throw that in. It's a factor that you only get from thinking, okay, well, it can't get worse than this. It actually does get worse than this, and it boom, another 20% off the board. Like I've seen it every single cycle I've been a part of, where realistically, from a fundamental mathematical perspective, the price shouldn't go lower than this. And because there's like, oh, well, we didn't know about this and we didn't know about that. And that leads to a chain reaction of this. And oh my God, these guys are affected. And oh my God, these guys are affected. That changes everything type thing. So I hope I'm not just rambling and I hope that makes sense to a lot of people. It's like you always got to expect the absolute worst of these people when shit hits the fan because they most likely did some irresponsible stuff with people's funds. And now they have their pants caught down and it creates liquidations on scales you've never seen before because it's free market, right? It's a free market and everybody gets tagged. When it finally blows up, everybody gets tagged, and that's usually sets us back years. That's usually how the cycle goes. And I still don't think we're anywhere near the levels where funding gets irresponsible like that. It's still a bit away, right? So.
Yeah, the good thing is also that we don't necessarily need to try and predict now where Bitcoin could possibly bottom in the next bear market, right? Because there will be indicators that will help us understand a broader area of where it could find a bottom, right? We can use all kinds of technical analysis that will help us. For example, a very good technical analysis is when Bitcoin reaches a weekly oversold area. If you use the RSI, or if it prints a weekly bullish divergence, right? That's one way to do it. There are other indicators that you can use, of course. There's analysis you can do to macro cycles and to easing and tightening cycles of central banks, right? It's at a certain stage, for example, after central banks have been tightening monetary policy. I said it right. You can start assuming that they will stop the tightening process, right? You can use all kinds of economic and inflation data to try and predict that. That's how it was more or less in 2021, right? 2022. Yeah. We saw inflation starting to top, right? And people started assuming that the Federal Reserve and other central banks will stop tightening their monetary conditions because of inflation finally doing what central banks expected it to do, right? So there's all kinds of stuff. Different traders will use different kinds of confluences to try and find areas that are appropriate for buying BTC. So that's the good side of this, that we don't necessarily need to try and predict whether Bitcoin is going to drop 50% or 60%, because at the end of the day, all that will help us and members is to claim clout on social media, so to speak, right? Because it's very difficult to say now whether Bitcoin is just going to drop 60% or 80% or just 20%, right? We will see the right indicators when it's time to buy. I guarantee you that.
I'll just say this: if Bitcoin were to drop 60, 70, 80% again, I'd be the happiest fucking person in the world.
Oh yeah. Oh man, you
I'm
have no
just I'm
idea.
just being I'm just being honest. Like I just you give me another chance like that, it's over, my friend. It's just
Absolutely.
it's just
Absolutely, man.
I've never been in a cycle that doesn't exceed my expectations on how bad it can get, right? Because again, it's less about TA at that point. It's more about contagion and people you should trust with funds to do really stupid shit. And it's just normal because it's the wild west of finance, and that's what it is. It's the era of digital pirates. It's the era of con artists, and it's the era of new Ponzi schemes, right? And when all those are thrown in the mix, anything is possible. And that's why, I never throw out that someone says, "Oh, but our a cycle drawdown is typically 85%." It's like historically that's been accurate. I think every cycle we've ever had has suffered an 80% drawdown at the minimum. And that's a scary thing to say, right? Because you think about where's 80% from here, and it gets really gross really fast. It's just to say, like, I don't put all my chickens into that basket thinking it's going to happen. Um, I just believe that at any moment in time, where we currently trade at, um, Bitcoin as a specific is extremely undervalued, no matter which way you look at it, and over time, these prices will one day be laughed at the same way it was laughed at 4 years ago and 8 years ago, and back when I first started, right? So I always throw that in the mix. Timing it is very difficult. In the moment, it really does feel like it's over, right? I saw how most of this group, and I don't refer to our traders, but I refer to our members. Maybe not all of them, but a lot of them get really sweaty when we're just suffering a typical correction, like a typical price discovery correction of 30% or more. I remember saying, keep it calm, keep it cool. This happens every time. It always feels terrible. It always feels like it's the worst thing to happen, and then it's not. So again, like when people go, "Oh, I'm gonna buy 70%, 80% down," it's like I want you to consider the factors for it to get to that point. It gets really dark and really scary. Um, you start pulling funds off exchanges. You're too skeptical, so you wait a bit, and before you know it, price is already up 30, 40% from where you said you'd wait a bit. It's much more trickier, and I'm speaking on this as solely from experience of dealing with my previous cycle fallouts. And this goes back to the 2018 one and the 2021 one. It gets nasty, and the decision making is not as clear as it sounds. So just throwing out some words there because it does get bad. It does get bad. But to put all your eggs in one basket and say, oh well, 70% drawdown is where I'm gonna buy. It's like, yeah, you think now, but then it happens, and then it's much more difficult to process that because everything's blowing up around you. You don't know which exchange to trust. There's always FUD going around. There's headlines coming out that this casino this exchange may have been using customer funds to front a position, and then people pull out and becomes bank runs. And if you've been there in 2021, you know exactly what I'm talking about. It happened to KuCoin, it happened to Bybit, it happened to FTX, it happened to Celsius, and these bank runs. Binance, I remember happening to Binance. Like, these bank runs can kill an exchange, just off the fear alone. So um and you could say it's only bad if you're not short, and then your exchange blows up. You know how many people I know were euphoric with 50x position shorts on FTX, and instead of just retaining their capital, lost it all. Do you know how many people I know that happened to? So like, just remind yourself, like, everybody, if you weren't there in 2020, 2021, you don't know what I'm necessarily referring to. It gets really bad. And some people go under. I know some of the best traders that are probably perma bears, didn't even get to see their light of day. They tried to pull out their money and they couldn't, right? And they had the right idea. They had the right idea. They protected themselves to the best of their knowledge, and they still got hit. So again, it's all roses, right? And but when like money is pouring out of the space at rates like that, and shit falls through, it's not so easy to make these purchases in real time, and it's fast. It's fast. It doesn't stay there long. So, just some lore for every cycle drawdown.
Yeah, good one.
Yeah, and
I think
with
it's
that being
time.
said, yeah, I didn't realize it's already 10:02. Man, I go really I get really rambly when I don't sleep.
I guess catch up on some sleep, man.
Oh no, we stay up all day today. We're good. We're good. Look, the market's moving. Can't go to bed.
All right, then
All
thank
right.
you guys, everyone, for joining and for being very active in the chat. I hope this was helpful to you. As per usual, let us know on the fundamentals or charts and ideas wherever you feel more comfortable. If you have questions or comments, if you want us to look at something, next macro stream is tomorrow at 5 p.m. Central European Time, 10 a.m. Eastern. Hope you can make it, and take care, everyone. Rego, my pleasure, bro.
Yeah, thanks a lot, DB. Thanks, chat, for everybody for tuning in. Hopefully, you guys learned something today. You know, kind of a slow macro schedule there, so you know how it goes. Can't really talk about much until more comes out, but so far so good. We assume things will pick up at the end of summer, right? So stay posted, keep tuning in, and if I'm not mistaken, we have a stream. There's a stream coming up right after this, so obviously don't go anywhere. And yeah, we'll see each other next week, same time, same place. DB, it's a pleasure, and yeah, signing out now, guys. So take care.
Take care, guys. Cheers.
Cheers.